Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. Today I prepare you for Traders Club, which meets at 6 p.m. on Right Side Live this evening. My first blip is answering an important question about bull traps. A bull trap is a false breakout above a technical resistance. A bear trap is the opposite, a false breakdown below a technical support. If you follow my buy and trade strategy, you minimize getting caught in both bull traps and bear traps because we don't bet on breakouts or breakdowns. When the technicals shift to positive from negative, you are more aggressive on buying on weakness. When the technicals shift to negative from positive, you are more aggressive on selling on strength. I advocate using good until canceled GTC limit orders to buy on weakness to a value level or to sell on strength to a risky level. My second blip is to tell traders not to be complacent about the great credit crunch. Remember the points I made yesterday. Builders and developers are having problems repaying $629 billion in construction and development loans to the community and regional banks. Many projects are on hold, and for completed project, potential buyers cannot get mortgages. Lenders in some locations have been reluctant to lend given the risk that property values continue to decline. Many community banks are ripe for failure. 2,368 lenders have construction loans that exceed total capital. 467 publicly traded banks have risk exposures to C&D loans that exceed regulatory guidelines. Logic tells us that there are many more kitchen sinks and 500 trillion in notional amount of derivative contracts spread around the world. My third blip looks at yields, gold, crude oil, and the dollar. The yield on the 30-year bond shows quarterly support at 4.578 with a semi-annual pivot at 4.473 and weekly and monthly resistances at 4.191 and 4.111. I am forecasting a trend towards higher yields. COMEX Gold shows quarterly support at 879.5 with daily and weekly resistances at 919.6 and 935.7 and monthly resistance at 1020.9. In my opinion, the gold bubble burst above $1,000 the ounce. NYMEX crude oil reached a new all-time high on Tuesday at 119.90. Monthly and semi-annual supports at 106.80 and 99.83 with my weekly pivot at 117.39 and daily resistance at 122.13. In my judgment, Fed policy fueled commodity speculation when the funds rate crossed below 3%. The euro reached a new all-time high on Tuesday at 1.6017. The euro has been dragged by my quarterly and monthly pivots at 1.5877 and 1.5916, which prevents a breakout. My fourth blip looks at Dow Transports and Dow Industrials, the Dow theory indices. Dow Transports have not been able to stay above 5,000 as I expected. Weekly support is 48.75 with my quarterly pivot at 49.49 and daily and quarterly resistances at 51.38 and 52.73. Dow Industrials show weekly support at 12,357 with my annual pivot at 12,670 and monthly pivots at 12,846 and 12,861 and daily and semi-annual resistances at 12,969 and 13,049. Don't forget to join me at Traders Club on Right Side Live this evening at 6 p.m. Send your comments and questions to support at rightsideadvisors.com. That's today's 4 in 4. Enjoy your day.